Hello, this is Strictly Money, and I'm your host, Saijal Patel. Thanks for joining. Let's face it, no one likes to pay taxes, and filing them can be even more daunting, especially when you're trying to maximize the money you keep and minimize what you give to the government. Well, you're in luck because Tim Cestnick is a seasoned tax practitioner and has a wealth of knowledge, and he joins me now with his tax tips. Tim, great to have you back.
It's good to be with you again, Saijal.
So, Tim, I want to first start off because there could be an impending CRA strike. We're taping this show, so we'll air this in a couple of days, so we'll probably know before that. In case there is a strike, what kind of impact could this have on the filers? What should they know?
Good question. Well, the first thing to know is that there won't be a change to the filing deadline. You're going to have to file your taxes on time. That's by May 1st of this year. If you do have any self-employment income on your return or your spouse does, then that deadline is extended to June 15th. But the deadlines don't change. What you could probably expect, though, because of this strike, is a delay in processing time. So if you're expecting a refund, it's not going to come as fast. Ironically, if you owe money, they'll probably deposit your check just as quickly as they normally would. But I think you should also be aware that filing by paper, if you're still filing by paper, is probably not a great idea. It's going to really slow things down a lot more. If you file electronically, it's going to speed things up a little bit, even if they have a strike. I think that a lot of the online services will still be available. So things that you can do through your My Account online account, you can still do, whether that's changing addresses or checking on your notice of assessment or filing an objection. A lot of things you can do online. But if you're trying to get hold of somebody by phone at CRA, that's not going to work very well in the next few days or until the strike is over.
Yeah, so if you have questions, that's going to be a problem. Yeah. You talked about the deadline, May 1st this year, because April 30th is on a Sunday. I know a lot of people miss the deadline or think that they shouldn't necessarily file or have to file early or on time, and especially if you don't owe money. But can you walk us through why it is important to file on time?
Absolutely. So first of all, if you owe any money, you want to file on time, because if you don't file on time, you'll pay a 5% penalty on any tax balance owing, plus 1% per month that your return is late. So you don't want to pay those penalties. But even if you don't owe money, even if there won't be a penalty, you want to get your refund back as quickly as possible if you are owed money. It's your money. You don't want it sitting with CRA for too long. So file your return as quickly as you can. And also, you should be aware that if you ever need a favor from CRA in the future, for example, if you ever would like to have some interest or penalties waived in a particular situation, maybe you're late filing because there's been a death in the family or something like that, the government does have the ability to waive penalties and interest in certain situations if you request fairness. But they're not as likely to give you that if you have a history of filing your returns late. So you want to file on time just to make sure that down the road, if you need a favor, you're more likely to get it.
Okay. Let's talk about some of the big mistakes people make when it comes to leaving money on the table, because no one really wants to do that. Some of the commonly overlooked tax deductions. Can you talk about those?
Yeah, for sure. I think, obviously, let's talk about RSPs for a second. So if you made an RSP contribution for 2022, you're entitled to claim a deduction for that on your return when you file. It doesn't necessarily mean you should claim the deduction this year. If, for example, you're expecting to have a much higher income next year, you might actually save a lot more tax by claiming that deduction next year instead of this year, because you can claim it in any future year. It doesn't have to be the year you make the contribution. So that's one thing to people often miss.
Yeah, because a lot of people, Tim, I'm sorry to interrupt, but a lot of people think, well, just because they're entitled to that deduction, they should take it that year.
Exactly. And so there are other deductions that are what we call discretionary, meaning you don't have to claim them in the year that you are entitled to. So another example would be capital cost allowance or depreciation, say, on a car, if you're using your car for work purposes. Quite often, it does make sense to claim that in the year you're entitled. But if your income is going to be much higher next year, again, you might save more tax by delaying that deduction for a year or maybe even 2 years. So keep that in mind. I think also things like donations. Normally, you're going to save more tax by claiming all the donations on the tax return of one spouse if you happen to have a spouse. So normally we claim that on the higher income spouse's return, but it probably doesn't really matter as long as you group them all together. Look, that's not going to make you wealthy, but it's going to put, another $50 or so in your
Yeah.
pocket versus CRAs. So that's better.
Okay.
And medical expenses as well.